Hello and welcome back to AIBC Summit YouTube channel. In this video, we're going to be taking a look at the institutional approach to investing, specifically in crypto in 2021. And we'll also be covering the GameStop news that we saw this week and just how much of a magnitude it is on the banking industry. Well, joining me to discuss this and more, I have Chris Thomas, Head of Digital Assets at Swissquote Bank. So Chris, how are you today?
I'm absolutely fantastic. It's great to see you once again, Jess.
Great to see you again too. And what news we're discussing today? I want to start off because we've got a range of topics and it's such an interesting time to be having these kind of conversations. And 2021 had been off to a cracking start from the crypto perspective. And I want to ask you about institutional investors specifically. And at what point did you really notice that they were inquiring about digital assets as your role at Swissquote Bank? And what were some of the areas of interest that you acknowledged?
Absolutely. So, I mean, you're right. It's been a really crazy start, super volatile markets. But that adds to the fun, the excitement of this industry that we're in. So looking back on the institutional side, we started seeing more and more interest earlier last year, mid or early 2020, where the smaller asset managers and hedge funds started coming into the market, family offices as well. And then through mid-2020, we started having discussions with cantonal banks. We are an infrastructure provider as well as liquidity provider. And so we had lots of discussions and are continuing having lots of discussions around those topics. And then the tail end, Q4, we started having more discussions with private banks who are essentially looking to come in and simply, how can my clients buy Bitcoins and how can they custody Bitcoins? Because high net worth individuals are contacting private banks to say, hey, what's this Bitcoin thing? Buy me $1 million worth.
Wow, okay, so we're really seeing it come from demand from the clients there, as well as this knock-on effect, but just, I guess, a lot of need for knowledge as well. This is probably uncharted territory for a lot of these big institutions, and that kind of coincides with what we're seeing at the moment. So if we look at what we saw since January, we saw obviously the price skyrocket to around 40,000 US dollars, and it's retraced back to around 30,000 at the moment. And what we're seeing now is some investors are actually moving to alternative coins, Ethereum, and some DeFi tokens. So when we look at institutional investors and their inquisitive nature for Bitcoin, is this making it quite an uncertain territory for them at the moment now that we're seeing them turning away? We're seeing more retail investors turn away from Bitcoin to the likes of Ethereum.
So it's an interesting landscape, and it depends on what type of investor you are, whether you're a larger institutional investor or whether you're a small, more nimble one. We saw Bitcoin moved from about 20,000 up to 40,000 very, very quickly in this short space of 2 or 3 weeks. And for anyone, that is too much of a rally. And so when you get to that 40,000 point, naturally it becomes a selling point for a significant amount of investors, especially when they've been entering the market maybe 15 to 20,000. You're getting a 2x, maybe 2 and a bit X return. That starts to allows some of them to take profits. It also allowed a lot of miners to say, hey, let's sell now, knowing that in the short term, the price may well retract down to 30K. So we had that element. And then we had the whole, yes, we've gone too far, so now let's sell off to go into the altcoins. And so you have some influencers starting to say this is altcoin season starting because people know that the entry point is Bitcoin, and then you scale out, you sell Bitcoin, or you start exploring further down the curve. So that's how we've seen that move. In terms of where you're seeing the move, you're seeing a strong demand for Polkadot, the DOT ecosystem, coming up as a potential competitor for Ethereum. You've seen Aave and Uniswap every day. They're just rocketing, especially this week. They're up about 50 to 80% each. But I think when looking at it, larger institutions are still more interested in Bitcoin. They're now getting comfortable with Bitcoin, the digital store of value. Longer term, is 30,000 a good entry point for them? Longer term, yes. Does it make sense to sell 30,000 just now to try to aim for maybe 25,000? That's a challenge. That's probably risk reward. It doesn't work for most people. So that's why we're seeing a real strong foundation around 30,000.
That's really interesting. And I like the phrase you used there, which was small and nimble retail investors, I think. It's a very charming way to put it. So we've discussed there, and you've essentially said that even though we are seeing these DeFi tokens and projects and platforms skyrocket, really the institutional digital asset strategy, it hasn't changed much in 2021. In hindsight, it's still very much a Bitcoin dominated scene.
It is, yes, but we are seeing that the CME will be bringing out futures. We're seeing, Ethereum moved over 700% last year, outperforming Bitcoin. And the DeFi space is obviously using the Ethereum infrastructure to, create all of their apps. So this is very much like a focal point and will be a focal point going on. But as I mentioned about Polkadot, that's really skyrocketing as well, because if DeFi becomes prohibitively expensive, like gas fees, and also network congestion on Ethereum, then we might well see the Polkadot network taking over the whole DeFi ecosystem. And if that happens, then we're going to see a fight between Ethereum and Polkadot.
Wow, okay, so we're definitely going to have to watch this space there, and it seems on a weekly basis because the industry is just moving so quick. Now, before I knew that we were having this conversation, I had to ask and pick your brains about what we've seen with GameStop shares, because this has been something which has just kind of skyrocketed to the media's attention over the past week. A really trending conversation. It's a huge bullish move, which was essentially a bet, the Wall Street investors against the Main Street investors, as it were. What does it point to? And I want to ask you about if it points to a larger issue really of kind of manipulation or a huge surge or push in the markets. And in your experience, Chris, based on what we've seen with this huge price rocket, should the SEC actually have some responsibility here?
Yeah, I mean, it's quite extraordinary what's happening here. 900% move in 5 days. It has affected significant hedge funds in the space in the US. What has happened is that on the Reddit communities and Discord communities, a lot of them have effectively been pumping these stocks. They've been looking for heavily shorted stocks that hedge funds have been involved in, where hedge funds are effectively selling, hoping the price will go down so they can buy back their positions at a profit. So these guys are trying to force the hedge funds to be stopped out at a significant loss. And it seems to have worked on this particular one. They've tried on several other stocks the last few weeks or so, or last few months. And on one hand, I absolutely love what they're doing, because you could argue that it is giving the hedge funds a taste of their own medicine. They've done that themselves for a long, long time, or certainly part way of that to themselves. And so to what extent really is it market manipulation, or just the herd coming after the Wall Street so-called gurus and having a go? If they genuinely see valid reasons to invest in GameStop, then why not? But yeah, I think it's a bit of a game at the moment. Regulators obviously there to protect the public and to keep an orderly market, so they're naturally very concerned about what's happening. But frankly, hedge funds losing, well, tough luck. That's their choice.
Really interesting, and thank you so much for giving us some clarity on that based on your position as well. I think it was really interesting to hear your insights. The industry, Reddit, Twitter has been up in storms for sure, so we'll be keeping a close eye. And Chris, thank you so much for joining me today. Great as always to catch up. Shame we can't meet in person and conduct these interviews as usual, but always a pleasure, and thank you so much for your insights today.
Very welcome, Jess. I'll see you again soon.